Have you noticed how fewer and fewer companies are going public these days? 10 or 15 years ago, an IPO was the dream of every ambitious startup founder. It was the moment you rang the bell, went mainstream, and declared to the world, "We've made it." But something has changed. In today's world, even billion-dollar companies are choosing to stay private for as long as possible. So what happened? Why are companies avoiding the public markets that once defined success? Let's dive into the real reasons behind this massive shift in modern business strategy. Going public used to be the ultimate milestone. It gave companies instant access to billions in funding, boosted their brand value, and allowed early investors to cash out. But it also came with a price: exposure, regulation, and the never-ending pressure to please shareholders. In the past, founders were willing to trade control for capital. Now they don't have to. The game has changed. The first big reason is simple. Private money is everywhere. Venture capital, private equity, sovereign funds. The world is flooded with liquidity. Today, a startup can raise billions privately without ever touching the stock market. Companies like SpaceX, Stripe, and Epic Games have raised huge amounts of money while staying completely private. They don't need an IPO to grow. Investors are lining up to back them behind closed doors. In short, going public is no longer the only way to raise capital. It's just the most complicated one. The second reason is control. When a company goes public, founders lose a huge part of their power. Suddenly, they answer not only to customers and employees, but also to investors, analysts, and the media. Every quarter becomes a race to meet earnings expectations. Every decision is questioned. For visionary leaders who think long-term, like Elon Musk or the team behind OpenAI, that constant pressure can kill innovation. Staying private gives them freedom. They can experiment, take risks, and focus on the future rather than quarterly profits. The third reason is cost and complexity. Going public isn't just filing a few forms. It's months of audits, legal fees, compliance checks, and investor roadshows. It can easily cost tens of millions of dollars just to list, and then millions more every year to stay compliant. And when something goes wrong, the public backlash is instant. One bad quarter, one headline, one viral post, and billions can disappear overnight. For many companies, the headache simply isn't worth it. Another major reason is market volatility. Public markets are unpredictable. A company's stock price can swing wildly based on interest rates, global politics, or social media hype. In a single day, your valuation can collapse, even if your business fundamentals are strong. Private companies don't have to deal with that chaos. They can focus on growth, stability, and execution without watching their worth fluctuate every morning. There's also the rise of private secondary markets. In the old days, going public was the only way early investors and employees could cash out. Now, private share exchanges allow them to sell part of their stake long before an IPO. That means a company can reward its people, attract new investors, and still stay private for years. But there's one more reason, and it's cultural. For decades, an IPO was a symbol of status. It meant you'd have made it as a founder. Today, that mindset is fading. Modern entrepreneurs see public markets as restrictive, not glamorous. They'd rather stay nimble, private, and in control than deal with the drama of Wall Street. In many ways, staying private has become the new power move. Now, this doesn't mean IPO are dead. Some companies will always go public, especially those needing huge capital or brand credibility. But the balance of power has shifted. Private investors have deep pockets. Technology allows global fundraising, and founders have realized they don't need Wall Street to build world-class empires. For the average investor, this trend comes with consequences. The biggest growth now happens before a company ever reaches the public markets. By the time it does, most of the value has already been captured by private investors. It's a new reality, one where opportunity is moving behind the curtain. So the next time you wonder why fewer companies are going public, remember this: it's not because they can't, it's because they don't need to. The public market used to represent freedom, but in today's world, for many of the most innovative companies, real freedom lies in staying private, building quietly, scaling confidently, and growing on their own terms. If this video helped you, make sure to like, subscribe, and press the bell. Share and do comments. Thank you.